Now I sort of want to introduce you to fixed income separately managed accounts. How do separately managed accounts evolve or come about? I think they became quite popular post-GFC, where equity funds, a lot of equity funds saw a lot of redemptions, a lot of bond funds saw a lot of redemptions through the GFC, and there was a lot of funds that started freezing themselves in terms of redemptions, and investors and advisors basically determined at that point in time that, one, they didn't want to be beholden to managers and other investor behaviours that you experience through funds, but they also demanded increased transparency. So separately managed accounts over the last 6 to 8 years have grown in popularity, especially in the equity space. In the fixed income space, it's been a little bit more slow in terms of taking traction. But in my view, separately managed accounts where you actually hold and have a beneficial ownership of the securities that you invest in, from the fixed income attributes that I mentioned earlier in this presentation, I think they're probably more important to basically have a separately managed account in the fixed income asset class than I think that I believe having exposure to equities in a separately managed account. And the reason being is that because you hold those securities on a beneficial basis, effectively you have the ownership rights and the benefits of those coupon streams that I mentioned before, and you have the benefits of that capital redemption that you have. What is important about separately managed accounts is that versus going to the other extreme and holding a direct portfolio of bonds, is that separately managed account overlays it with a professional management team, a team that's like myself, that's been in fixed income markets for a long number of years, have managed money before, knows how to negotiate in the OTC markets and get the best price for clients, for investors, and basically be there in front of the desk 24/7. And I think this is quite important in the sense that for advisors that do like the concept of direct investments, especially in fixed income, it frees them up to basically spend more time with their clients and understand what their clients' needs are, and then knowing and safely knowing that there's a professional investment team managing a portfolio of fixed income securities for them. If we go to slide 19, we believe that we've built the first, or offering the first retail eligible fixed income separately managed account. We only invested in the Aussie denominated space in investment grade securities, and we have a portfolio of fixed and floating rate securities, which allows us to move in and out depending on market events in terms of the way we weight and our duration views and the way we weight different parts of the portfolio in terms of cash, government securities, corporate securities, financial institution investments. The retail fixed income SMA, or the Australian fixed income model portfolio mandate, typically holds around 12 investments, 12 to 15 investments, and we can go up to 20, 25, 30 investments, and we have a mandate minimum of 5 investments. We have a target return, we have a benchmark of RBA cash rate, we're absolute return, because the retail fixed income SMA is a yield focused investment, and we have a target return of RBA cash plus 2% net of fees. The minimum investment amount is $100,000, and we suggest that because it's a yield investment, that the time frame should be around 3 to 5 years. If we go to slide 20, a lot of these client and advisor benefits I've already fleshed out in previous slides. The client has, as I mentioned before, has beneficial ownership in the portfolio of fixed income investments, and that delivers a higher return net of fees to term deposits. They gain the benefits of high levels of capital preservation, and they also have liquidity benefits compared to term deposits, where in the cash space you've got to give, now there's a requirement you need to give 30 days notice. we can tend to buy and sell within 1 to 2 business days a position. It has a defined and predictable income stream, and as we only invest in the investment grade space, it's a portfolio of quality fixed income investments, and we feel that it's because we invest in the OTC fixed income markets. It's pure fixed income. It's representative of what fixed income should be. Advisor benefits. It's a full end-to-end service which is scalable for advisors, and it's managed by a professional investment team on a centralised administration platform. Like as I said before, freeing that investment decision and removing that investment decision away from the advisor allows the advisor to spend more time building their client bases as well as understanding their clients better in terms of their financial investment needs. And I thought it's best to show that from a diversification perspective, where our retail SMA sits in terms of senior capital structure as well as credit rating. Finally, I just wanted to give you a summary of what a fixed income SMA provides. It's an income generator, so it's very good for retirees. Gives you beneficial ownership of the securities. We have an open architecture managed account administration service that supports this type of investment structure. It has a business alignment, as I mentioned before. And we feel it's an enhanced value proposition for an advisor and for the advisor's clients. On that note, I finished my presentation, and I'm happy to take questions.